Bitcoin can't seem to find the bottom and drop 50% just this year. I mean, look at this. It's just a massive drop. And it's probably going to rebound, but we don't know when. How about if I go about metals? I mean, talk about metals. They had a really huge rally, and this is silver, and it went up more than 200% in a year. And then it does this weird back and forth lately. 33% in one day, just last Friday. Okay, that's a lot of uncertainty. And then market itself kind of wobbles. I mean, it goes up and down, goes sideways for quite a while, but again, not a lot of certainty. So what do they all have in common? What is in common is there's not much certainty on what to do. Is it time to buy? Is it time to sell? Is it time to hold tight? You probably saw the market that it's kind of like interesting. Like today, I'm recording it on Friday, and Friday the 4th, 6th, and it rebounds right now. But who knows? Maybe on Monday it's gonna go down again. So, what can we do? So I decided to create a video where I can create something which will beat the market, and we have a certainty of what to do next. So let me just describe you what it means. As an example, can we actually beat the market in its own game? Can we make more profits than the market does? Or even better, can we protect the money that we have, not as much, and not drop as much as the market does? Okay, so that's one of the things that we are trying to do it in this particular video. Now, what I will do, I'll create a system, and the system, which is the part of the systematic trading. System means verifiable rules, and verifiable rules means that I will be able to repeat it over and over and over again. Okay, that's the main idea. That's why I'm going to test it, not just for a little bit, but for a big window, for almost 18-year window. Now, take a look. This is the system, and as you can see, this is the performance. The yellow one, the yellowish brownish line, is the performance of the system, and here's the market, S&P 500. You can see that we're beating it for sure. In the long run, and in the short run, you can see how market is kind of, because I showed you, going sideways lately for the several weeks, and you can see what the system does in the same time frame. It just goes up. Why? Let me explain you why. Now, before I do that, so what happened again? The market, it's kind of zoom into the market. You can see it for the past several months. So probably somewhere from November till now, it just goes up and down, right? They're going mostly sideways. Now, everyone knows Meta, Nvidia, Tesla, Microsoft, Amazon, but these are all the big boys. But what about if we basically buy only these guys and not everything that is in the index? So like Nasdaq 100 index universe has 100 stocks, right? Some bigger ones, some smaller ones. So like these are the big boys. What if I buy the 10 stocks? But doesn't mean that we need to buy these particular stocks like Amazon, Microsoft, Meta, Nvidia, Apple, Microsoft, Tesla, right? Or maybe something else. So what about if we'll do it by following a certain rules? And in this case, I will use specific indicators, not many, literally one indicator, to specify which one to get into, what kind of candidate to actually use. Like, is it Meta or is it something else? Like Walmart maybe, because Walmart is also part of the Nasdaq 100 stock set. So that's another idea. So like I'm using something like, okay, let me sort my indicators, by indicator, let me sort my candidates and get into the candidate I like based on certain rules. Because that, again, comes back. It will create a certainty for me. How about we will use this approach and periodically, let's say every week, we will check who is our best candidate. And only those candidates will get in. And if we fell out from the favor, from that list, basically, then we will remove that candidate, we'll close it out. Okay, so that's one of the ideas that we can play. As an example, right now, if I run that system, the one I just showed you, it sits in AMAT, Applied Materials, in Walmart, KLA company. So something you would not even think that to buy. Let's say like Walmart, why? Everyone talks about Apple, everyone talks about Nvidia. Well, those are the favorites of last year, but not right now, right? So that is why that curve was going up. And the curve was going up because it was sitting in a certain type of stocks. But again, how would I know that to sit in there? I will follow the rules. So now, once I finally get into my positions, into the stocks that I chose, right? I only hold 10 stocks at a time in this particular system. And every week, as I said, I will look at which ones to get in again or not, or like stay in them or just basically get out of them. But meanwhile, in that whole span of week, some things can happen, right? So what I can do, I can just put the trailing stop, which allows me to trail behind, and as the stock rises, so is my stop loss. So it will be automatically rising every single day. This way, not only I will lock in my gains, but I also will protect myself in case if something happens in between, let's say, the time that I got into positions and the next week when I will choose my next set of candidates, if I need to get into those. So that's the reason for the trailing stop. Now let me just sum it up, because that was it. These are all the rules. It's a very simple system. Has literally that's it. Three rules to get in, and two rules to rotate, actually, to get out. So in this case, we're working with NASDAQ 100 stocks, so all the stocks from NASDAQ 100 universe. It will automatically choose 10 positions to get into, and I will allocate 10% of each. Means that it will be equal allocation. So there is no extra ambiguity. It just, let's say I have $100,000, and that means that for each position I will allocate only $10,000, however many shares I can buy for that stock. Okay, so that's the idea in this case. It's not, again, something that a lot of people preach, but that's one of the dozens of the systems that I run. Okay, just keep it in mind. It's not the only system that I'm running, but that's the idea behind it. The entry rule that I will enter based on the highest RSI of 1 year of trading, that's 252 days of trading, as my indicator which candidate to get into. So I will sort them up by the highest RSI. Note, it's not, notice actually, it's not the 14 days RSI that everyone talks about. It's unusual. It's the 252 day RSI. So it's much longer, and it allows me to pick the stocks which were in a up movement for a long time. Okay, that's the idea. Once I identify my candidates, I will get in as market unopened the very next day, and then I will trail behind with 20%. That's my stop loss, just in case, right there. Capitalizes again on the gains and protects me. And every week, every 5 trading days. Notice, it's every 5 trading days. So if there's a holiday, we'll skip it, which means that we still count 5 trading days. We're going to get out, and if our candidate list changed. Otherwise, we'll keep the same candidates and keep the same positions. So here it is, that same system. As you can see, the performance of it is outstanding. It adheres to the main methodology behind it, is you will let the winners run, and as this number 35.5 means that how many average days you are in the trade, and it's more than basically a month. Those are the trading days, by the way, 35.5 trading days on average. But you can see that average loss is 5.36%, while my average win is 12 something percent. So I'm winning because I'm letting my winners run, right? If my candidate list does not change, I will stay with the same trades until they stop me out, either by trailing stop or by getting out on the next round of rotation. But because of this, my maximum drawdown is only 36% versus market went down 56% right there in 2009. Okay, it went down 34% right there in 2020. It went down 25% in 2022. It went down almost 20%, like 18 something percent in 2025. So just keep in mind that we can protect ourselves and not go down as much as the market does, right? But we can still generate double the returns. This CAGR, compounded annual growth rate, is double what the market does. Market is 8 point something percent. This is 15.52%. Just so you understand, it's basically almost half the drawdown, almost, not exactly, but, and almost double the returns. So if you look at it monthly, you would have been 16% up as of yesterday when I created this snapshot. Like today the market is rallying, that probably number would have been even better. But you can see that doesn't mean that it can outperform the market all the time, but it can outperform the market significantly sometimes. The good testament is 2026. 15% versus market is 0.54% only. Again, that was as of yesterday, as of Thursday closing price. Now, to wrap things up, simple rules, better and more reliable performance. Okay, that's the reason for systematic trading. That's why I preach systematic trading. My business partner Lawrence preaches systematic trading, and we have our students who are systematic traders. That's the way to do it as far as we're concerned. And to be honest, I don't want to even look back and try to trade them based on a gut feeling. Now, before you go, like, subscribe, and if you have more questions about the system or about anything else like systematic trading, you can write at info@tradingsystems.com. Check out our website. Obviously, you can check out our books as well. They're available on Amazon, and pretty soon we'll have it on our website, even at a cheaper price than on Amazon, so you can buy it as well. But we have 4 books on systematic trading, which allows you to explore a lot more and understand a lot more details how it all works. Otherwise, I'll leave it to it. Thank you. Bye.